Hello and welcome everyone. Just a quick video to give you an update. I know a lot of you follow the Person Algo Optimizer product, and some of the trades that we've put out. This is the VXX. This is the Volatility Exchange Traded Note. Specifically speaking, when the VXX goes down, it signifies the market or this S&P's rally. This model has been short, as you can see, 3,300 shares. It scales out of half the position. This is your risk factor. Here's your entry, and then we get these yellow lines here are the trailing stop function. The profit target is the blue line, as I just made an X and circled here. It covered the position on the next best. When it traded at or below the price, it took a profit on 2/3 of the position, and that's what it scaled out. Short 3,300 out at roughly 2,600 and left a position on. Basically, I want you to just note that it has finally trailed out on the balance and the system is flat. And that may signify that we're going to see maybe some disturbance in spider or maybe some downside. This is a particular interesting week in the market. But before we go further, I just wanted you to see the video for a couple reasons. A, if you are trading spiders and you're still bullish the market, we may be in for a little bit of a rough patch or consolidation period. When the VXX goes short and covers a position, it generally has done so at the expense of the market has stopped rising. Again, this is an inverse relationship. And again, when the VXX goes down, it signifies that the SPY can go up. And when this thing goes down and stops, or at least covers its short position, it signifies perhaps there could be correction or downside in the spiders. And that's what I wanted to warn you about. What's more interesting about this setup, you'll see there's two indicators, or actually three. This is the volume histogram, which we're not really a big fan of. This is on balance volume, and this is my proprietary volume indicator exclusive with TradeStation. You'll notice that the volume is starting to move up, and you'll notice that there's some histogram bars here. When the market goes down, but it's signifying there's volume moving positive, it means that there's some short covering, and this market is getting perhaps some accumulation of long positions. That's what I wanted to really get to. So let's go, and I'll go back and look at a couple things with you. The last time we had a nice short position on the VXX, you could see was over here. It gets out of half the position, it trails out, and then flat consolidation period to a mild upside in the VXX. Again, when VXX goes up, stocks go down. In other words, when the VXX stops going down and gets flat a position, it leaves us to a questionable position for the S&Ps that are prone to correction, sideways or lower. Just like before, look at the coincident factor here. My volume indicator is starting to show accumulation, and on-balance volume doesn't give us any hint at all as to what's going on. I'm less likely to use on-balance volume, as I have for the last year and a half, than I am my own volume indicator right here. The difference, it's the calculation and what we have incorporated to use to measure volume against overall price action. Over here, once again, you can clearly see the trend of the volume is going up. On-balance volume hasn't really given us clear direction on anything yet. But these considerations, and what I mean by this week being weird, this is the Jewish Holy Week. Of course, we have Yom Kippur on Wednesday, which will be missing market participants on Wednesday and around the world, by the way. So it's not just exclusive here to the U.S. It's the end of the quarter, option quadruple witching or quarterly expiration. That's number two. We got the Federal Reserve meeting the week after this on the 26th to raise rates a quarter point. It's the end of the fiscal year for the U.S. government. So there's a lot of cross currents events happening in the marketplace right now, and with the VXX covering a short position, I am afraid that we may be seeing some more selling pressure enter into the market. And so that's one of the things that I wanted to put out, that in history, when we have seen my VXX system cover the short position, it has initiated some pullbacks in the overall S&P 500. This is a system that, as we could take a look, couple things that I want to go through. This is doesn't go and give us enough backdated history. So let me go over here and go to format symbol, and let's change this up and go from the first date from 2010 and just give you like an idea of the performance summary of this to see, is it reliable? So again, as we went back, we get a lot of really good signals here. It covers the position, it gets out, and man, look what happens. It goes up. Now a couple trades, it gets short and gets stopped out, short gets stopped out. That's to be expected for a lot of traders, right? We probe the market. Let's look at the overall performance now. Nice 45-degree angle with a new equity high again. So this goes back, and then we'll take a look at periodic returns based on a $100,000 model. Again, as an ETF or an ETN in this case, every year has provided some neat things about the system. And I just want you, while it's not going to get you, a lottery winning, look at the percent profitable trades here. So the smoothness of the equity curve, and every year, look at the amount of trades that it's profitable. So that's number one. Look at the profit factor, number two. So it's something that we would say, boy, this is pretty reliable. It's not 100%. No trading system ever is. But as an indicator and also a trading system, it actually is something worth paying attention to. If it's flat, I don't think I want to be aggressively long the market, especially in a week that we could see continuation selling pressure due to quarterly window dressing, and the market is vulnerable for that. So this was the purpose of maybe bringing this to your attention right now. And again, it's nice to see that the system is flat in the VXX. So that's what it's signaling in the market right now. Let's go over here and take a look at some other interesting metrics of the market. This is the IWM, the Russell. It's been in a daily PPS sell mode. The advanced decline is weakened. The advanced decline on the NASDAQ is weakened. The advanced decline in the NYSE is actually in a weakening condition. However, here's another thing. In the Dow Jones Industrial Average, we made a secondary higher high. We had maybe the outside chance we would see a higher move because the breadth or the advanced decline of the Dow was actually supporting this rally. But it's this chart here, gang, that I want everyone to focus in on. It is the NASDAQ, the Qs. As we're late in the trading session, 3:22 in the afternoon, Eastern Standard Time, the advanced decline formed a lower high, but not a lower low yet. But we are closing back below the monthly pivot on a daily basis, and we're going to leave the NASDAQ Qs, NASDAQ 100, in a weakening condition on weakening breadth on bad volume. That, my friends, is the tech sector weighted effect of the market right now. In the S&P 500, we have not formed a weakening condition of lower high, lower low in the advanced decline, but we have not seen great strengths in volume. Let's expand the S&P up just a little bit, and we'll bring back the on balance volume tool. If I may go to format analysis, we're going to go to on balance volume here, hit format, and then go automatically scale it. And we'll put this into focus for you guys. And here we go. All right, now we can see this a lot clearer. What I wanted to share with you is that the person's volume indicator, it is, as on balance volume may be giving a lot of traders a false sense of security because it actually made a higher high on this last rally, giving people a sense that the volume was strong. My volume indicator has made a lower high reading. So that puts the market in a questionable position for further strength. It actually has a bearish divergence bias to it. So is this a potential M top pattern in the market developing? Well, we won't know until we get further evidence. One evidence is the advanced decline going to follow through and give us more than just a one-day retreat? That's the question we don't know. We haven't generated a sell signal here. I hate to draw too many lines, but notice that one thing that's completely absent is a sell signal. There's no sell signal here today. So we're sitting here closing below the last 2 days' lows. We still have not formed a lower high, lower low pattern, and yet we don't have destruction or overall erosion in the strength or the breadth of the market. So we don't have enough evidence to say, hey, the top is in, we got to get short, unless you're getting ahead of yourself and thinking, hey, there's just no chance this market's going to go. But it definitely tells you, based on the VXX, a little different analytics says that, hey, guys, takes a defensive tone to the market. Profits, tighten stops, things of that nature. while I don't see an imminent crash in the market, I think this week, as we get into quadruple witching, a light holiday, believe it or not, the Jewish holiday for Yom Kippur, and to all my Jewish friends, happy holiday. And then for the rest of us, think of it this way: we definitely have a lot of mixed cross currents between the fiscal year end preparation of what the Fed is going to do with a quarter-point rate hike, and again, any trade talk, tariffs, tweets from the White House, et cetera, that the market seems to be extremely vulnerable to, both for positive and negative reactions. So with that said, I think it definitely is instilling to me to say it's time to take a defensive tone in the market. And this is one of the very first times why I'm putting this out. It's one of the very first times I've ever stated this. Here's the 7 different models that we use. So some people like to use one model for trading. We have several different models that we look at. You'll notice that almost every single model, and they're all different, they all have gotten either flat, or in this case, this one actually reversed and went long. This one got out and it went long. This one got out based on other than a trailing stop function. This one actually went long too. So we have a couple of them that went long, and then some are just short only. And this one here went long and is making a little bit of money. So the moral of the story is, not only is the VXX covered short positions, but in some instances they've gone long, and that's even more meaningful, that we could see some follow-through weakness in the overall S&P 500. So can we get ultimately bearish in the marketplace? Well, here's another little fun-filled fact. If we take a look at my E-mini S&P trading page, and part of that is we put together the ES, you'll notice that the market has a consecutive today series of zigzags. Was short, just covered the position here. But here's the E-mini S&Ps based on the December contract. How can we actually want to get short and get really ultimately bearish when all of the market's done? If you think about it, I mean, maybe there's a good day trade in here, and that's about it. But if you think about it, this is Monday, and this is Friday, and this is Thursday. How do you get ultimately bearish when the market has just gotten back to where prices were Thursday? And that's where we stand. So this is based on the December contract. If you look up here, it's ESZ. So it's not a continuation pattern where we rolled out of SEP into DC. This is comparing apples to apples. Last Thursday, this is where the December contract was. Today, Monday, this is where the December futures is. So I think what it says is perhaps we're be a little bit more cautious on the market. And for me to get look for further upside this week, 2 things have to happen. I would like to see the market get back to where it once started, which was around this 2903 number. That's for starters. So we'd like to see some upside get back up beyond that zone. Or B, if we're going to get ultimately bearish, I'd like to see at least a couple-day consecutive selling with heavier volume and more destruction or erosion of the advanced decline falling over or rolling over. So with that said, I think at the very least, it doesn't tell me to get ultimately bearish. It tells me tighten up the stops. The market is in a period of consolidation. If we get more evidence to the contrary, I'll certainly do another upload video. Now, let's share with you what Algo 17 is doing for us. All right, what does Algo 17 do? The Algo 17 Extreme. So first off, here's an interesting stat. First off, the market's in a bull market. It's in an uptrend, right? We've seen some really good signals. Look at this. Since going back in March, and we can go back a little bit further, but what I wanted to just point out to you, notice what's absent here. There's no sell signal. We have a sell signal and a profit target, and it trailed out, and then stock went up. Had a short, it got right out. I mean, it gets short and it gets stopped out. It gets short, beautiful action. Gets out a half, trails a stop on the balance. You know, this market this year gets short. It's not been working for short. So if you've been selling this market, you know, there's been some action. You've seen some good trades. Here's a short, gets out. Here's a short, gets out and chops around. Great short here, takes out on a trailing stop function. How about the big kahuna short, right? So you look at the beginning of the year where we had the short. What's nice about Algo 17 is it allows us to do several functions that we've never been allowed to do before. I'll get to that in just a second. Beginning of the year, it had a profit target. Wow, amazing, right? Got out and it left a lot of profit on the table, but it's only doing what we ask it to. Trail a stop. These are wide trading bars. Can you override a system when you're short? Great. Yes, you can. Can you get out at a better profit? Sure, if you know where that is. But when you have an automated system, is designed to do several things. Get you into trades that you've programmed, A. B, trail a stop, scale out of the balance. And that's what this is at least been programmed to do. It's a tough year for those that were selling short as the major trend is up. And if we're going to get short, one thing's missing today, a sell signal. It's not afraid of going short. And, you can clearly see what I think this is great for all traders, whether you're an avid back tester, whether you're a beginner trader, knowing when to sell. Selling on the way up would lose you money. When the market rolls over and you get a bona fide sell signal, great, and then you're able to take a profit. Here's a market that rolls over and you get short and then get stopped out. Okay, no harm, no foul. A short gets stopped out, no harm, no foul. A short, it's just like probing the market. Well, this isn't a trading range, right? It gets short as the market rolls over. Beautiful exit, and then thank God it got out because the thing just went straight up. Now, I want you to know it does not have buy signals because this is a system designed for sell signals only, and that's part of the whole algo process, right? So let's get into that real quick. When we go up to format strategies, you can see this is first an algo system 17 extreme. Why extreme? As we've said before, we can do several new functions that we were never able to do, is independently backtest each system with the risk reward. Find out, in this case, for example, with the low close doji, many of you are familiar with my low close doji. How awesome is this? Do low close dojis work? Well, in this case, yes. Should we use a moving average for confirmation for added confirmation? In this case, the answer is yes. So at this point, what we're trying to sit there and say is, boy, should we be looking at the market in terms of taking sell signals without a moving average confirmation? One of the things I wanted to point out is also here, look at the risk reward ratio, 1.75. So this year and going back for the last 5 years, we've been in a bull market. What is the greatest risk reward ratio? Well, the difference between that and, oh, look at this information. This is unique. The PPS sell signal. We actually have determined using the S&P 500 that it's looking like we have a better risk reward with PPS sell signals than we do with a low close doji, and it does give out better confirmation of profitability using a moving average overlaid. Now, this is based on a daily chart, and again, we can discover, and if you see 1 is true and 0 is false. So this, when it says high close doji over here, or for example, a buy signal, the buy signals are turned off. We're not looking at optimizing this for a buy signal system. It's sell only. But notice that the risk reward ratio is a lot higher with PPS sell signals, just slightly, like 1 full point more so standard deviation than the low close doji, which is a great signal. But in this market, when an uptrend's going like this, there has been no real meaningful correction or downside action. So when we look at the market with the VXX covering all its shorts, that raises the red flag. But when the system doesn't even have a sell signal, all we're suggesting is at this point, raise stops, protect some of the profits you have, and we'll wait to see when we get a signal. It's not afraid of selling on confirmation, as you can see. And when it has gone short, it's quickly gone out, thank God. Can you imagine being short from here and taking all that heat on the trade? We don't need that in our lives. You don't need it either. But for those, this is the most amazing product to at least help you to say testifiably, if we have sell signals, are they working? Are they prevalent? And where do we get off the train ride? And at this point in time, if someone said, John, should you be bearish the market? I would say, I don't know about bearish. I don't have a sell signal, but I sure am cautious in the market right now. Thank you for watching. I hope this helped explain at least the position with the VXX, the models that we use, and other ways that we look at making better trade decisions, and we have been all year, as our performance shows. Thank you for watching.